Ladies and gentlemen, good day and welcome to the Q3 and 9 months FY24 earnings conference call of Prestige Estates Projects Limited, hosted by Axis Capital. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Ashutosh Mittal from Axis Capital. Thank you, and over to you.
Good afternoon, everyone, and welcome to the call. We have the management from Prestige Estates, represented by Mr. Irfan Razack, the Chairman and Managing Director, Mr. Venkat Narayan, the CEO, and Amit Moore, CFO. I'll now hand over the call to the management for the initial comments. Thank you.
Venkat. Good afternoon to all of you. Welcome to post-results interaction of Prestige Estates. To begin with, in terms of operations, we had extremely good quarter, and overall 9 months have been very good. We had also given operational note before. Our total sales for the 9 months stand at 16,333 crores, up by 81% compared to previous year. Likewise, even collections have gone up by 20%. 9 months collections stand at 8,478. All in all, we sold 16.13 million square foot of area so far, totaling to 8,402 units. And in terms of average realization, again, it's grown 19% year-on-year to 10,143 rupees. That's what we realized 9 months this year so far. We sold at an average 31 units a day so far in these 9 months. Also, in terms of launches, we have seen highest ever launches during this fiscal so far. We launched over 30 million square foot of area, aggregating to 11,000 plus units across various cities. Prominent in that is one of last quarter especially is the largest single project that we have launched in Hyderabad, over 12 million square foot. We completed during the quarter again in Hyderabad 3.6 million square foot of office project in Goa, and Moxie Hotel, which is a brand of Marriott. Important milestone in terms of completions, though this quarter we have completed 12 million. This year so far we have completed 12 million. Last week we had 6 project completions. With that, overall in terms of number of projects completed and delivered so far, crossed 300, which is an important milestone for us, aggregating close to 180 million square foot of area. Now, what's important to note is over 3 decades of our presence in the real estate across various cities, if we have done 180 million square foot, right now as we speak, are under construction and under planning total projects are also equal to 170 odd million square foot. We're working towards churning high value and large projects quickly. If you see the profile of the project compared to earlier years and now, the scale of each project have grown. Almost we have 6 projects now over $1 billion size. And in addition to that, Prestige City as a format is something which we are taking to each city. We have now Prestige City in Bangalore, Prestige City in Bombay, Prestige City in Hyderabad. We are looking at other cities where there is traction and absorption and launch Prestige City, which is a sizable residential and integrated development of ours. Looking at financials, this year, 9 months, the total revenue stands at 7,192 crores and EBITDA at 43%, PAT at 19%. Quarter on quarter, if you look at this quarter, we had total revenue of 1,970 crores, slightly down, though we have completed a lot of projects. Revenue is recognized based on the handing over. So handovers have been slightly lesser, but this quarter whatever we have completed in the last quarter will get handed over, and the revenue should be back. Now, we have overall now of sales already made, close to 32,000 crores of revenue that we have not yet recognized. And that will come for recognition over a period of next 3 years, which is assuring 10,000 crores plus of a top line, not considering any new sales that we are going to do every year, year after year. Overall, debt remained almost at the same level. Debt equity remained at 0.6. It's been a good quarter. We've got a lot of projects coming up for the launch, and we're also looking at the regions that we have not been present to expand our operations, apart from adding new projects in the existing cities. With this brief, I would like to open the forum for a question and answers, please.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We have a first question from the line of Parikshit Kandpal from HDFC Securities. Please go ahead.
Yeah, hi, Irfan Ji and Venkat. Congratulations on a decent quarter. So my first question is, in the 9th month pre-sales of 16,000 crores odd, how much is the contribution of the new launches?
How much is the contribution of new launches?
Yeah.
I think as inventory is concerned, there's hardly any inventory in Bangalore, so it will come only from new launches. Of course, we did have some inventory in Hyderabad, and there's a continuing inventory in Mumbai because that's a big inventory there. So, but however, a lot of inventory, bulk of it comes from new launches. 80%. That's what Venkat said.
So that's the only concern which I have now, sir, because you have grown at such a rapid pace, and I mean, you will look at all means crossing 20,000 crores of sales this year. So given the upcoming residential pipeline, barring a couple of large launches, so we don't have enough large launches to support the growth on this 20,000.
No, we have enough and more. Everything is not seen, but then there is lot on the plate. And in fact, if whatever we had probably planned, we would have crossed our target also of this thing. But doesn't matter. As and we go along, for the next financial year, we have lot, and there's a lot of discussions happening for pipeline. See, after all, we do understand that we need raw material, which is land. There's enough and more land that is being offered to us. That's the good news. So we are also choosy in what land we pick up. It's not that everything that is offered to us, we just pick it up. And we've got the ability to turn around projects within 6 months to a year. When I say turn around, it means from the time we acquire land to the time we bring it to the market.
Just to add to what Chairman said, now in terms of residential upcoming projects, the total potential that we have is the inventory that we can bring in is around 42,000 crores.
Yeah.
Okay, and just because we launched a lot of projects during this year, 80% of the sales have come from new launches, and we also have got close to 16,000 crores of inventory.
Yeah.
That inventory plus the upcoming projects put together, we have enough to sell next 2 years. And as Sir was mentioning, there's a lot of diligences that are happening in different geographies, and those also will get added.
Okay, got it. So the second question is on the NCR now. So NCR, we have a Noida project which got slightly delayed, but you have put it out for a launch in FY25. But any sense on like how the Delhi launch, which we have already have, when it can happen, and on Gurgaon side, when will we get our first breakthrough in terms of closure of business development?
Yeah, I mean, that's a good question. You see, the first one, which is Sector 150, which has been stuck for a long time, even just as early as this morning, we had a conversation. They are hopeful that in the next fortnight or so, we should have the approval in place. Once that happens, we have inventory there, Plus, very recently, we have tied up a 63-acre plot in closer to Indrapuram. Now, that's where the Prestige City in NCR will come. And that also will be work in progress. It all again depends on how quickly we can get the approvals and do our job in terms of getting the planning and everything else in place. So it's all work in progress. And even in Delhi, there are a couple of projects that we have tied up. One is in KG Marg and the other is Kamla Nagar. Even that also will happen soon.
Okay. And for Gurgaon?
Gurgaon, yes, there is something, but then I don't want to talk about something which is not yet this thing signed up, but then the rest, whatever I've talked about, is all signed up deals. There are one or two big ones that we are looking at, but the moment it gets signed up, we'll talk about it maybe the next quarter.
Okay. And this is the last question on the BKC. So we've still not seen that project the commercial project move into ongoing, still showing in upcoming. So has the financial closure achieved there? When are we looking to break ground there? Has the contractor been appointed? So at what stage of approvals or progress it is?
No, why they have kept it in ongoing in the first place? The contractor has been appointed, the L&T, the rehab, the tower is, construction is going on, and it's going on at a fast pace. And the only question that you ask is on financial closure, which Venkat will update you.
Okay.
Which is underway. We should be able to conclude it next 2 to 3 weeks.
Okay, sir. Okay.
But I don't know, maybe it's a lapse. It should have been under ongoing because it is actually factually ongoing. Work is going on pretty at a good speed. And I don't understand why it's... those are all things work in progress that will come.
Okay. Okay. Thank you, sir. Those are my questions and wish you the best.
Thank you. We have a next question from the line of Kunal from Bank of America. Please go ahead.
Sure, thanks. Just two quick questions from my side. The first one is that a lot of sales in the quarter have come from Prestige City, Hyderabad, where company's stake is 30%. And yet, if we look at what were the bookings at a company level and that attributed to Prestige, both are very similar, 5,300 crores and 5,100 crores. So I just wanted to understand, why should this be the case if the ownership is 30%? Is it that you have earmarked inventory, which is what is getting sold out?
See, it's not like that. You see, we bought the whole land is 62 or 63 acres, out of which we bought from that same landowner only half of that land. And the other half belongs to our land partner. He did not want to sell the whole land to us. So it's like a joint development or a joint venture, whatever you call it. And in the SPV that we have bought, the company share is 60% and the balance is with the other partners.
So then the SPV, half the land is bought, half the land is where we are doing project management working, for which we get fees. But in terms of master planning, it is considered as one project. So it got sold in that manner. I think similar structure is also being done somewhere else, wherever we buying land, the remaining is held by the landowner to do it as a one project so that the efficiency can be better.
But one thing that I'd like to add here is, the main entity is the listed entity will definitely get the upside in terms of the top line fees, which we're getting from our partner as well as the subsidiary, so that there is the overheads and everything else will be picked up, as well as there will be a profitability. So there is a benefit in terms of that. So we get benefit twice. So that way, I think there's no loss in terms of profit or anything like that to the listed entity.
Right. Got it. The other one is, Venkat, I think in your opening comments you were mentioning the price realized per unit is up 19%, 9 months of the year. How does that split between, price increase versus a mix improvement for you?
Mixture of both. If you look at existing markets, price increase is around 12 to 14%. And contribution of Mumbai also, because the realization per square foot is higher, pushes up the average realization per square foot slightly above. Leaving aside Bombay, if you do the math, it could be around 8,200 or so, and that gets pushed to 10,000.
Even Bangalore today is an average of 10,000 plus on sales that are happening. That's how the price has gone up. Because even on the contrary, even our cost of construction as well as land cost also has gone up. So it's not that it's a windfall, because it's all fresh inventory and fresh construction that's happening. If you had old inventory and selling at new prices, it's a windfall, but unfortunately in our company, we don't have any old inventory.
Understood. Okay, thank you so much.
Thank you. We have our next question from the line of Pritesh Sheth from Motilal Oswal. Please go ahead.
Yeah, thanks for taking my question and congrats on strong performance. Firstly, in terms of launches, we have seen some push out in Bombay, Prestige Nautilus. But otherwise, whatever launches which are planned in Bangalore and Chennai, the Palava Gardens, is on track for launch in Q4?
Nautilus will not happen in Q4. It will happen in the first quarter of the next financial year. And Forest Hill, we are trying hard to see whether we can get some part of it in this quarter. That is the Q4 quarter. And Palava Gardens also, the plan has been approved by CMDA, but Chennai moves very, very slow. In fact, I was personally there to push things, but unfortunately, it goes slow. Hopefully, we should be able to launch it in the next quarter.
Sure. So in that case, how do you think about maintaining this 5,000 crore kind of a run rate for, next quarter? Obviously, there is, 16,000 odd crore of inventory which we have, largely probably would be in Hyderabad. So how do you think about, ending this year in terms of pre-sales number?
See, we've got one launch in Bangalore that will come up this month, and maybe one more. And the rest of it has to be sustenance sales. And we have set a benchmark for us for 20K, which I believe will cross easily without even getting that 5,000. But if you do get the 5,000, it will go to 21 or so. But then the following quarter will be a boom quarter for us, because the number of approvals that will come, number of launches that will happen. So it will go into the next financial year. But I think as it is, to get to 20 was big. So I don't see any stress in that. Yes, one quarter will be more, one quarter will be less. Like in one quarter, we had done 8,000. Another quarter, we did 3,000. But at the end of the day, according to me, we have to cover 3,700, which we should cover easily, maybe more than that. That's where we are now.
Sure, got it. And just on business development again, so you laid out a strong pipeline in NCR, but a couple of markets which I'm probably interested in is in Mumbai, where we are almost at the end of launching whatever projects we had once we launched Nautilus and the second phase of Balloon. How is the pipeline looking like in Mumbai? Would you still be now aggressive in acquiring more projects, or probably, just wait and watch and execute the existing ones, and then probably, a year down the line, you will start building up that pipeline? And specific comments on Pune as well, which is one of the markets we are looking closely from the residential perspective.
Yeah, we have signed a term sheet in Pune. If that happens and fructifies, legal due diligence is on. If that happens, we'll have a fairly large project there. And Mumbai, see, I can't go and tie up anything and everything that's offered to us. The whole of Mumbai is being offered to us. But we are also doing the touch and feel. We want to make sure that whatever we've tied up first is there. Like in Mumbai, there's another big one which we are not talking about, though it's there in our books, is Jitamata Nagar. Now the position is that the vacation has started, the eviction has started there. It's a large piece of land, 17 acres. And if you look at Mumbai, I think we should look at the outskirts now. because the high price property, too much of it also will create a glut. So apart from what we have, which is in central Mumbai, we'll definitely be looking at places like Thane and maybe something more in Mulund or some in Andheri and other places, which will be that much more, the product will be that much more affordable to Mumbai standards.
Sure, interesting. And just lastly, while we are planning a whole lot of, new project additions, how do you think, how much do you think, the spend would be in terms of, new project additions? Are all these projects largely outright, or how is the mix? And, what is the planned investment for next year in terms of new project additions?
See, whatever the upcoming residential projects that you see close to 53 million square foot that we have put up in the presentation, slide number 21, mostly paid for. If you ask exactly what is the balance to incur cost in this entire the list of the projects, close to it would be around 800 to 1,000 crores. Otherwise, it's paid for fully, and with the good for launches, various stages of approval. Some of them are in planning stage. Whatever is under diligence right now, we are pursuing some land parcels in Bangalore and NCR predominantly. Those we need to pay for. We will be able to achieve that through internal accruals.
Okay, but from the mix perspective, those are like outright or balance tilted towards JV, JDs as well. How is the mix?
So we would say 60% of them are outright and 40% of them will be JV.
Okay, so the broad calculation, 4,000 to 5,000 crore of new land spend would be sufficient to get that much of pipeline, or I'm a bit off on that number.
For the next year, we have adequate pipeline because we also launched a lot of projects during this year, so we have inventories that we can sell from even those projects. And then, as I told you, upcoming also we have enough. This year, broadly, business development point of view, towards upcoming projects, balance 800 to 1,000, and maybe additionally another 1,500 to 2,000 is what we should provide for. So net 2,500 to 3,000 crores.
Great. Now that's it from my side. All the best.
Take the next question from Kushagra from Old Bridge Asset Management. Please go ahead.
Yeah, hi. Thanks for the opportunity. Just three questions. One, on the Ocean Towers. So, what's your sense on the response which you have received? Like, how much time probably you think it will take to sell off the entire project, given 10% or so had got sold out in the launch quarter. So, just some qualitative comment over there.
Ocean Towers, I think we are pretty happy with the response. Without the CEC being ready, without any advertising, we've sold almost 40% of the stock or more. That is the tower that we've launched. There are two towers there. The first tower has gone almost 40%, and without any aggression at some good pricing. And hopefully, I think at the same speed, we should be able to clean it up in the next 3 quarters. And then we've got the second tower, which we'll launch probably another after 6 months or so. 2 more quarters.
All right. And can you give us the launch timelines for 3 particular Bangalore projects, which is Southern Star, the Vartur project, Raintree Park, and the Falcon City Phase 2?
Yes. Raintree Park will be the first, which will happen in the next quarter. And then it will be followed by Southern Star, and then followed by Falcon City Phase 2.
All in 4Q, or the latter two will get postponed to first quarter of FY25?
We've also got another project in Whitefield called Pine Forest, even that's fairly largish. Even that also should happen in the next quarter.
All right. And so just last question to understand, the upcoming and the land parcel which you have. So you have around 770 odd acres of land parcels, right? And the upcoming pipeline, which you've already spoken about, 40 million square feet, 42,000 crores. How much of this 750 acre land parcel, is not getting covered in the upcoming pipeline? And how, I'm just trying to understand beyond this upcoming of 40 million, and in the land which you have already signed or
in this 768, one is 224, which is Goa, which we already have done the planning, everything else, and hopefully, if everything goes well, it doesn't have a name, but in this investor presentation, but the name is given is Prestige Seascapes. It's got components of villas, plotting, and it's got a small component of a little hospitality asset, which is part of the clubhouse, and we also have high-rise apartments. So this approval should come in the next quarter, and moment that comes in with their registration, we should be able to launch that. It's a fairly largest development. Similarly, we have got the many others, like in Rajendra Nagar in Hyderabad, which is Goodwell. We've bought that land, 24 acres, which will again is under planning, which will come up soon. And then, of course, there is something in Bangalore North, which again will come in, which is 48 acres. And then we've got the biggest one that is there, which is more or less assembled and sort of aggregated, is Birdi. And with the new Mysore Road happening, it's almost 200 acres of land. So that could be another prestige city in that part of the city. So that's how it is. This land bank is not stagnant. There's nothing in this list that is not stagnant. And most of it will definitely come up for development at some point of time or the other. There's only one land which we may not develop at all, which is the land in Mangalore, because we believe that for us it will be a defocus, and at some point of time they may monetize that land, which is 21 acres, and then that will be getting out of our system.
All right, sir. Thank you and all the best.
Thank you. We have a next question from the line of Abhinav Sinha from Jefferies India. Please go ahead.
Hi. Thanks for taking my question again. Venkat, can you give us an idea on the sales breakup for the 9 months between the major cities and resi commercial?
Breakup of what, Abhinav?
Of the pre-sales in the major cities as well as residential and commercial.
Predominantly it's only residential. Okay, so breakdown city-wise is not in the presentation. I'll have it sent to you.
Okay, so I just wanted to check, how much is Bangalore as a percentage now, and, have you sort of achieved the diversification measure there that you wanted to?
The broad numbers I can give you. In detail I'll give it up, share it with you. Bombay is around 3,500 to 4,000. Hyderabad is going to be around 3,000. And the rest of it predominantly is Bangalore.
Okay, so Bangalore is trending around 50-60% now?
50-60% again.
Okay, and are we where we wanted to be in terms of Bangalore contribution, or you still think that this ratio is a little dynamic and Bangalore can go down?
Oh, see, ratio is the byproduct of the work that we do. To maintain the ratio, we are not acquiring the projects. So, there's a business potential in Bangalore and doing well, and we can get the approvals quick and launch. We'll do more projects, and Hyderabad is doing extremely well. Prestige City has got great response. As Chairman was mentioning, we have got 24 acres of land, which can be a large development, 7-8 million square feet of development in that area. So, with that we will launch. So, this mix is also going to be very dynamic. Now, NCR projects get launched, automatically then that will add to the pie and Bangalore may come down further.
Got it. And sir, on commercial mix, so earlier it used to be a meaningful contributor, right, to the top line as well as bottom line. But what is the thought process here? Is it like, the cycle is not very conducive for commercial sales, or you would like to see it back up again?
No, the cycle is extremely conducive for commercial sales. Only we have held back. We want to now not do too much of strata sales. though we are doing a small part of it, but the rest of it is to create assets, build it up, lease it out, and then